Talk very briefly about those Canadian numbers again. 60,000 jobs added to the economy, triple what was expected. Wage growth comes in at 3.9%, meaningfully lower than expected and lower than in May as well. For insight, we're joined now by Desjardins. She is chief economist at Deloitte Canada, and she joins us in the studio today. Thank you, first of all, for being here. Your thoughts on these Canadian numbers?
Well, as you said, really a solid beat in terms of the number of jobs created. Having said that, it was... when we look at the month of May, we did see that blip down in terms of employment. And so I think on balance, what we're seeing is for the quarter, job creation continuing. I think from the Bank of Canada's point of view, they're looking at this very seriously, as you can imagine. I'm sure they like the relief on the wage side. But it does suggest that the economy is continuing to tick along, despite the fact that we have seen interest rates rise so significantly over the past year. So,
of course, what people are wondering is how the Bank of Canada views this. It's due to make a rate decision on July the 12th. Coming into these numbers, we heard from other economists that it would take a lot. It would take a big miss here to budge the Canada off a rate hike. Do you see anything here that would cause the Bank of Canada not to raise rates on July the 12th?
No, I think this sort of solidifies their, I guess, intuition in June when they surprisingly raised that policy rate was that the economy was continuing to perform very strongly and that they felt that they weren't getting demand and supply back aligned sufficiently so that we'd see inflation start to ease. So I think this really does justify that rate move, and it does justify another one coming this next week.
What about that wage growth number? That would be greeted, I think, as good news by the Bank of Canada. How significant is the downward pressure on inflation from a number on wage growth that is so far below what it was in May and also lower than economists had forecast?
It is, but remember, it's close to 4%, and the Bank of Canada's target is 2%. So we're still seeing pretty solid gains in terms of the wage side. Yes, down from 5.1, absolutely. That's something that they're looking for, some easing on those wage pressures. But having said that, it's still a pretty solid number in terms of that gain. So I think from what they're looking at, it's not going to be, okay, mission accomplished. I think it's still the case that they're going to be worried about wage pressures and fueling further inflation pressures.
What's your call on where Canadian inflation will be at the end of this year?
Well, we have it moving down towards the 3% level, so just below 3%. So, still moving in the right direction. But for the bank, they're pretty committed to 2%. So we're still above that target.
Bloomberg News reporting that job gains were led by increases in wholesale and retail trade, manufacturing, and healthcare and social assistance. Let's go to the United States now and remind ourselves of those U.S. numbers. 209,000 jobs added to the U.S. economy during June. 230,000 were expected. The wage growth number comes in stronger than expected at 4.4%. What do you think of these numbers and how they'll be interpreted by the U.S. Fed?
Well, it's still a solid month. We've seen consistent gains in terms of employment. And the wage numbers, again, just like in Canada, this is what central banks are looking at. What's going to happen in terms of the inflationary pressures as we move forward? Are we going to see any easing up? Labor market conditions are tight. They're tight in both countries. And so we aren't seeing any easing in terms of that tightness. And for central banks, yes, they want solid labor markets, but they don't want to keep upward pressure on wages for certain.